This is Jack Avey at Moneyfarm with our regular monthly update. June saw a return of calmness to equity markets. Buoyed by a period of relative policy stability, better than expected economic data, and crucially a more optimistic outlook for corporate profitability, global equities did well. Much of this performance was driven by the US, with the S&P 500 hitting its first all-time high since February and marking a full recovery since its nadir in early April. Geopolitics did, albeit briefly, return onto investors' radars. Israel and the US led attacks against Iran, with both nations claiming the Iranian nuclear weapons program had hit a critical point. Energy prices jumped, with the oil price jumping by $10 overnight. However, a limited Iranian response led to energy markets round-tripping to their pre-strike levels. Economic data was mixed. Inflation data, particularly the personal consumption expenditures measure followed by the Federal Reserve, was slightly worse than expected. Jobs data remained relatively strong though. Minutes from the Federal Reserve suggest they remain concerned about inflation risks to the upside in the US. In the UK, the strong GDP result from the first quarter of 2025 was confirmed in the last revised numbers. UK economy suffered in the second quarter, and the Bank of England is concerned that the economic malaise seen could continue. Markets also began to consider who would lead the Federal Reserve when the current chair, Jerome Powell, sees his second term end in 2026. The prospect that the new Fed chair would be more amenable to President Trump's demand for a looser monetary policy sent rates lower towards the end of the month. June also saw details added to the Trump administration's flagship fiscal bill, the One Big Beautiful Bill. Despite cuts to various welfare programs, the bill looks like it will further increase the US's deficit. Whether this is fiscal profligacy or a policy maneuver that will keep the US economy growing faster than its peers remains to be seen. This month's figure is $4 trillion. This is the amount that the Trump administration's One Big Beautiful Bill will add to the US deficit by 2034, if the version currently being worked on in the US Senate passes without any major changes. While the US government bond markets are yet to punish the US government for its fiscal largesse, we think that the US's growing deficit will eventually lead to a higher borrowing cost for the US government. The latest budget from the US contains a large amount of unfunded spending. Unless the US economy grows at a fast pace for a number of years, the fiscal deficit, relative to the size of the US economy, will grow. Usually, fiscal irresponsibility is punished by markets. An example of this is the premium paid by the UK government relative to the US government to borrow money, despite both countries having a broadly similar debt to GDP ratio. However, the US enjoys a privileged position. It issues the world's reserve asset and has a very wealthy population which it taxes. And in recent history, it has benefited from consistently strong economic growth. The prospect of fiscal pain is not appealing though. Higher taxes would likely slow economic growth, and printing more dollars would cause it to be a less attractive currency to hold. Neither of these are attractive scenarios for bondholders. Currently, it seems markets are pricing in a future where the US is able to muddle through, and there is no breaking point reached. However, this optimism may not hold. So what does this mean for portfolio positioning? We continue to hold a slightly conservative stance, with the potential for tariff-induced inflation or economic slowdown, both potential issues for the US and the rest of the world. We also maintain an underweight to longer-dated bonds, given the upside risks to inflation, as well as the potential fiscal impact of the US budget. Conflict in the Middle East, regardless of how brief, reminds us of the role that commodities can play to manage geopolitical risks. Thank you for watching, and I look forward to speaking with you soon.